Hello and welcome. Today we shall be taking a look at active investment management company Miton Group PLC. The company has a market capital of £91 million and is currently ranked 201st in the FTSE Alternative Investment Market Index. In the 2017 financial year, Miton had a turnover of £27.79 million and an operating profit before tax of £6.19 million, which gave it a margin of 22.27%. It currently pays an annual dividend yield of 2.65%, which is paid semi-annually in April and December. This dividend is covered 2.57 times by the earnings per share. Set up in 2004 and operated under the MAM, Miton, Midas and Acuin brands, working out of offices in Reading, Liverpool and London, it then changed to a more focused operation and from 2011 operated under the single Miton brand. The current CEO, David Barron, joined Miton in 2013 as Director of Investment Trust and Product Strategy and was appointed Chief Executive in March 2017. He has over 30 years of experience in the city, of which 20 have been focused on asset management. He was previously at JP Morgan Asset Management. The Miton Group employ 52 full-time people at its central office in London. The group has £4.5 billion of assets under management, divided between 9 equity-focused funds, which represents around 67% of assets, 4 multi-asset funds representing around 20% of assets, and 4 investment trusts, which represent around 13%. The £4.5 billion of funds are focused as indicated in the table. For the previous 4 years, Miton has had a consistent revenue of between £22 and £27.8 million and an operating profit margin from 2015 ranging from 5% to 22.3%, which gave it an average from 2015 of 15%. The forecast for next year is a 3% fall in revenue to around £27 million and a margin of 31%. With generated earnings for the previous 4 years of between 1.4 pence and 3.6 pence per share, the dividend has always been covered by at least 2.13 times the earnings per share. The share price standard deviation for 2018 was 10.9, compared to 73 for the FTSE AIM. The current share price is 38.2% above the 52-week intraday low. The assets under management update for the half year ending 30th of June 2018 saw the AUM up 35% to £4.539 billion. Total net inflows up 216% to £616 million, and the average AUM was up 31% for the half year at £4.126 billion. The half-year report on the 24th of September stated AUM at £4.539 billion, up from £3.354 billion. The group has seen 7 consecutive quarters of positive net inflows. The half-year cash balance remained robust at £21 million. The day after saw the trustee of the company's share incentive plan operating through Miton ESOP Trustee Limited, a UK registered company, purchased over 14,000 ordinary shares. The AUM update was £4.868 billion on the 10th of October. Additional listings saw Jervius Williams, a director, exchange growth shares for over 3.5 million ordinary shares. Also, an application was made to the London Stock Exchange for over 5.5 million new ordinary shares. On the 11th of December, the group bought back these shares for cancellation. On the 18th of January this year, the assets under management were £4.376 billion. The net inflows for the year were just over £1 billion, and the cash balance at the end of 2018 was £25.5 million. Full year results are due in March. The share price has fallen recently, but Miton is considered a well-managed company, which is reflected in the price-earnings ratio of 14.7. Miton pays a dividend yield which is lower than its peers of 2.65%, compared to the FTSE AIM average of 1.43%, but is better covered when compared to its peers at 2.57 times earnings per share. Miton has performed better over 2018 than other asset managers. Miton is geared to equity markets, as shown in the two graphs. When comparing their assets under management to the FTSE Alternative Investment Market Index and the FTSE 100 Index, it followed the general market through the year. For these reasons, I have given Miton Group an overall rating of 4 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.